Portfolio Builder members, welcome to our high yield covered call webinar class. We've got 9 folks in here so far. Welcome Henry, Hepler Group. We've got some nicknames in there. I'll skip those ones. Jerry, Mark, Mike, Rep 120. And this is a little bit smaller group because it does entail having a larger portfolio to be able to follow it well. I'll open up the mic for everybody later on to chat since we have a smaller group today. First, I'll do a small presentation on what I'm seeing going on in the markets. And so we have something quite unusual happening where we're seeing equities trade higher and bonds trade higher at the same time. And so this is the highest profit for people like Ray Dalio at Bridgewater, who essentially use leverage and go back and forth between stocks and bonds. And they go back and forth and make a ton of money doing this. And this is a rare period of time where both parts of their portfolio have seen profits at the same time that haven't been experienced for 50 years. So there's a good case that some major hedge funds are going to take profits off the table soon on the SPY, and at the exact same time start selling some of these bonds. And if you remember back in the beginning of the year and in December, we had all these big hedge funds come out, do these interviews with Bloomberg and every place they could, and they've really been pitching to buy treasuries as hard as possible. And so we got the TLT screaming higher, which does well if rates go lower. And it's unusual for these two to go up at the exact same time. Sure, they both have been rising for the past 30 years in general together, but they have an inverse relationship. So there's good fundamental reason that some big players in the market are going to be ready to take some profits after a record-breaking quarter. So that's kind of a big picture look at something that is concerning me. Meanwhile, the complacency in the market is getting back to a dangerous level. So the VIX volatility index is now at 1343. I'll go to a weekly chart. We can see that it's not as low as much of 2018, and it could sit there and just do nothing for a long time. And of course, not as low as the 2017. So I'm not ready to jump into any kind of long VIX position yet, but it's just important to notice the collapse in volatility without any interruptions. So, if you look at the screen, how many red candle bars can you count in a row with no interruption with a green? And so I can see one spot with 4. We're currently at 4 right now. Can we go 5, 6, 7 more quarters in total without a volatility spike? Probably not. And the market does like to test the waters. They like to try to shake it up and see who's swimming naked and can wipe them out. Another confusing thing that makes you wonder what's going on is and our original clients are all building an index of the cryptocurrency market. That was our first technology we built with this platform. Why on earth did Bitcoin spike in certain exchanges up to $5,000? And if you follow Jeffrey Gundlach, who called the Bitcoin crash 2017 December when it was trading at 20K, he is also the one who came out in January with his annual prediction, forecasting Bitcoin easily hitting 5,000. Of course, he doesn't recommend Bitcoin as a big portfolio position, but more as a speculative investment. But interesting to see that play out. So that's what's going on in the big picture. Let's look at our trade alert today and see how this sort of confusing things in the market has caused us to play it safe once again. Okay, so our return in this portfolio did jump from about 8.5% to 9.7% from the previous week. And what's important to note is that this screenshot is taken when I've covered the covered calls before I've written the new one. So you get a better idea of what's our true performance over this period of time. And so when we do look at the track record now, it's at 11.5%. So basically we have around 2% defensive protection this week. When you just kind of look at the total total strategy. And again, the basic concept here is we're rebuilding the S&P 500 with, or rather the SPY ETF with its most important positions that cost less than, really less than $200 a share. And that allows us to own 100 shares, and then we can start writing covered calls, which we can use to generate retirement income and protect our assets. So that's very important. So with a $150,000 investment, you can see how this portfolio has allocated the capital. And when we do flip to, I'll just scroll up, you can see the percentage holding. So Microsoft is our core position. Its volatility is almost the same as the SPY. So the yield we can make on that covered call on Microsoft is about the same as the SPY on that one. And this really creates some stability in the portfolio. The second largest position is Bank of America, which is one of the largest positions in Berkshire Hathaway, which is also one of the largest positions in the S&P 500 SPY ETF, followed by Apple and Wells Fargo. So Apple's the largest position in Buffett's portfolio, with Bank of America and Wells Fargo shortly after it. So you can see that represents the bulk of this portfolio's holdings, and this will be the same holdings for a long time to come. We will rarely optimize this, as the leaders in the S&P 500 just don't change that often. Now, if we scroll down, you can see this is how we inserted the order on 3/26. We did get assigned. We were playing it safe ahead of a Fed meeting, and so we did get assigned, and that's fine. We bought right back in. But this was launched at the same time as our other portfolios during the Christmas massacre. So here's the trades that we covered today. You can see the price we paid. In some cases, we generated a profit on the covered call. In that instance, most likely it was good because the market went up. In some cases, we had to cover for a loss, but that was also good, because we were able to make the baked into the cake profit that we took by playing it slightly defensive. So we'll go over that. You can see in general, our total return over week to week was about 1%. So it was a very good week, and that's because the entire market's been very, very bullish. Here's the new covered calls we put on. In general, we're protecting the profits on our largest positions, with the exception that we're still slightly bullish on the banks. And so as we scroll down, you'll see why. If we look at Microsoft, we chose the 116 strike. And you can see there is slightly heavier open interest in the put option market right now, with more volume today in the call options. So this was a mixed bag in terms of what the market's predicting, but we played it safe and added $3 of protection. So if the market goes up, we can make $35 per contract. And that's because of the spread. So we're agreeing to sell the shares for approximately a $3 loss at the time of putting this on, but we make up that loss with the $3.35 credit. Now, if we're right and the market goes flat or slightly down, we can generate more than $35 per option contract on that trade. If we look at Apple, we once again went slightly On the defensive side, the big news for Apple today is that they're cutting prices in China to try to compete with a much cheaper phone market. So it's an interesting move, but because of the overall movement from potentially tech into the financials, I played a little safe on this one. And you'll see when we get low, there's big bets on the banks right now for next week. Oops, sorry, let me get back to where we were. Facebook has some big news that they're adding a checkout system into Instagram that could potentially add some $10 billion of revenue by 2021. The market's reacting very bullishly to that. They're also have Zuckerberg saying he wants to increase tech regulation online. So he really, what that really means is he wants to create a bigger moat around his castle so that no one else can enter the space. It would be too regulated. So this has reacted very bullishly in the market. You can see there's a lot of volume on the calls and a lot more open interest. So we did do a little mixed on the tech. This one is the bullish 180 strike. Intel, there was not a lot of action, and we wrote just under the strike. Cisco has an amazing chart, and again, just because of the general feeling that we're going to top out and see some profit taking on both the bond market and the equity market, we went slightly lower. Comcast has a slightly bullish covered call at the 41, and you can see almost no put option volume, whereas there is a good deal of open interest on the call side. And here's where there's a much more active option market. In Bank of America, we can see a heavy skew of open interest and volume on the call option side. So we chose the $30 strike on this covered call, lets our underlying asset go up in value and still generates that income from the covered call. And the same setup for Wells Fargo. We can see very skewed to the upside for the banks. Let me now switch over to charts of each. So here's Microsoft, Apple, Facebook. And so you can see while Microsoft has recovered from its lows and broken into new highs, Apple is still recovering. Facebook is still recovering. Intel is near recovered. Cisco is just exploding higher. Comcast is exploding higher. Bank of America and Wells Fargo still have a lot of room to recover. So let's look at the charts. In terms of the track record, you can see from the screenshot and the trade alert versus what's the real-time reporting, there is a increase in ROI that's due to the in-the-money covered calls. So when we do cover those, that will drop, but we will most likely have an increase in profit from week to week. If we look over here, this is where we store our covered call trades. Keeps it nice and organized. And as we close them, they get moved down to here. Now it is misleading to see a loss on the covered call because that means our underlying asset went up. So in general, the bigger risk of our portfolio is when you see these 98% returns. You got to ask, did the underlying asset go down in value less than the covered call? So that's just a little caveat. If you see a negative on this, that's not necessarily a bad thing. And meanwhile, one other thing I like to keep an eye on if we look over at emerging markets, and specifically the China large cap ETF, this could be the best leading indicator to spell out trouble for the US equities. If China is going down, most likely there's going to be some serious problems abroad. So we're keeping a close eye on that. And also, you know, the relationship between gold and Bitcoin is something to follow as well. So did the gold rally potentially draw more interest into the cryptocurrency market? And perhaps. So, okay, so that's our general presentation of what's going on in this portfolio. Let's go ahead and open up for some questions. I'm unmuting everybody out there so you can chat. If you don't want to be unmuted, you can go ahead and mute yourself back. How's it going, Mark, Jerry, Jeff?
Good, Jason. Good. How are you?
Doing great.
On the portfolio, I noticed that the initial was 150,000, and then I noticed that the value of it was it 166, or is the current value of that portfolio now 170,391?
Okay, sure. So the in the money covered call, we don't have this program to actually understand the potential loss from the writing in the money covered call. So yeah, let me pull up the track record or the trade alert. So whenever I take the screenshot in between covering the position and then rolling it over, that's going to give you the most accurate P&L. So the most accurate P&L prior to writing today's covered calls is this one.
Okay. And with this portfolio, you haven't made many trades, or did you backtest this to December 3rd?
No, this has been traded since December 12th.
December 12th, I'm sorry. I know it was, okay. So has been, I thought this was a newer portfolio. That's why I'm asking.
Right. Yeah. All of these portfolios have been traded since the same schedule since December 12th.
Got it.
Let's see if we have any other written questions out there. You still hanging on to some Bitcoin?
Yes.
All right. Okay, let me pull up the
Bitcoin,
question box.
Bitcoin, Ethereum, and Litecoin.
Nice. Where's my? Any other questions out there, guys? Oh, Jerry's got a question. Oh, there it is. I'm muted. I think you. Oh, okay, there you go, Jerry. How's it going?
Good, bud. Thanks. I was just wondering if you could take a look at my portfolio and see if it's updated in there properly.
Sure. Yeah.
I'm giving you my.
Type me your email real quick just so I can search it real fast. Jerry's smart. He likes to put me to work during the webinars. Free labor. I like it.
I'm grateful
No, I
for
appreciate
it.
it. I love to demonstrate in front of the audience. So please, anybody who wants me to build their portfolio for them or work with you on it, we absolutely love to do that. And we'll go over the hour if we get the opportunity. So. Let's see, this is not the right sheet. Do you have the link handy that you could just paste into the chat and I'll just grab that? A lot of people.
I'm wondering You know, when
Why
I
do you
was,
guys have all kinds of secret emails and you guys are using multiple ones with our system in it? It's just funny. Yeah,
trying,
that email I don't think's registered to the spreadsheet you're using. If you
yeah,
could grab the link. Oh, that one might work. All right.
yeah, I think that problem was because when I contacted you, I wasn't getting your stuff through. Originally, I was getting it through that first email, and then
Sure.
I stopped getting it, and so then that's why I had the second one.
Okay, so you're trading in the high yield tab, right?
Yeah, yeah,
Okay.
yeah, yeah, that's it there.
All right, so just so everybody's not too confused, the real goal of this product is not to make you reliant on me for trade alerts. The real goal of our product is to teach you a very simple strategy to generate consistent returns and protect your assets and be able to have a nice retirement. And so, uh, you know, it's really nice to see Jerry take the concepts and start to tweak it a little bit for what he thinks will work better for his goals. And so you can see he has played with the palette slightly. And we did this together in one of the previous webinars. And so he's changed the assets and we've changed the weight levels to come up with this portfolio where he has 10% in the TBT, 5% target for Microsoft, 10 for Apple, 13 for the SPY, 13 for the inverse VIX, 20 for, or rather 8% for Bank of America, and then 5 and 5 for emerging markets and gold. So yeah, totally. Our software doesn't care what the tickers are in terms of the technology. It will let you do that. So you want to go check out how to update these trades?
Yeah, yeah, I'm doing this on Fridays, just so you know, not on Tuesdays.
Okay, so let's see.
On the weeklies, I'm doing on Friday.
Okay, sure. So let's see what we're looking at here. So are these positions still open or are these all closed and we need to move them? And are you still using the clever little rollover button on your platform, or are you doing it in 2 trades? Because that was an issue we were having
No,
last time.
I'm doing them in 2 trades just so it's.
Keep it straight. Yeah, that's easier for our platform.
Yeah, those are the options that are going on right now.
Those are all open right now. Okay.
Except for the SPY one there that I changed.
Okay, you want me to put this SPY one down here?
Yeah, sure.
Okay.
I think I may have it though, Jason. Though I think I already have it. So you go up. It's the last spot. Go up. Oh no, I'm sorry. Go down. It's above the. Go up above, a little higher. See right there. Right there. Yeah, right there. And that was it for the one on the first.
Okay.
And then I put the one on the first down below.
Okay, so what are you in right now on it? Do you have an open position right now on the SPY?
Yeah, it's that bottom one at the bottom.
Okay.
Yeah, it's that one.
So I'll just delete that because that's not the case. And so this one, you'll just, whatever you have to pay to buy it back is what you'll put there, and that'll close that trade out.
Yeah.
So yeah, looks like you're doing a great job. Let's see what your P&L looks like so far. 4.8%. Oh, you're doing really well. Very nice. Yeah, this looks good. I don't see any errors on my end.
I guess my biggest question is, if or when, you want to withdraw some money or you want to reinvest, that position, the profit, is where I'm getting
Okay, so
stuck.
yeah, let's say you need to pay rent. Let's withdraw. So I'm gonna actually move. That's something I need to fix on the template. So, all right, rent is $18.50 this month. We're gonna withdraw that. So it takes it out of your cash. So the profit's still the same, but your value dropped in terms of what you have to play with. So let's see what happens when I hit undo. Nope, what's going on here? Now I'll check into the, I cloned these extra tabs for us to have these new palettes, and I'm not sure why that's not feeding. That should automatically reduce your current value. So I'll check on the programming on that. You and I have been playing with this sheet a lot, adding and deleting the rows and all that. So, but that's where you'd keep track of it right here. So if you want to withdraw money, you just pull it out. In terms of compounding your profits, the platform is just adding up this column right here. So your net credit, whether it's positive or negative, will flow into your sheet. So as your capital grows from writing the covered call, you'll see that you're going to get a trade alert to purchase more and more stocks. In terms of withdrawing cash, then it'll reduce your capital. And so depending on how much you withdraw, you may be told to sell stocks to rebalance. But typically we're trying to keep a 10% cash buffer so that you do have cash always available to number one, to hedge our portfolio if we start to see the market slip, and number two, if you do want to make a withdrawal.
Okay.
So I mean, either we've generated return from our underlying asset increasing in value, in which case we typically have to cover our covered call for a loss, but we're happy with that, or the underlying asset's gone flat, slightly up, slightly down, and we're generating the profit from the covered call, in which case that turns into cash in your account, which you could either withdraw or you could start to slowly invest into your various positions.
Jason, it looks like this portfolio that you're working on is sort of like a combination of the emerging markets and the individual one. Am I right or wrong? Because it looks like the TBT is added and the EEM is added and the GDX is added.
Yeah, this is Jerry's smorgasbord of ETFs for sure. So I don't personally, recommend that anybody follow this particular palette. I'll just say that, maybe it makes the most sense for Jerry's outlook, and he understands what we're doing, and he's generating a nice return. He'll be able to protect his assets the same time and way we do when the time comes, and so it's generally just a almost completely bullish portfolio. The TBTs, possibly the provides a little hedge in the GDX. So in general, it's somewhat the same composure of our other portfolios. But yeah, you can see he threw a little bit of everything in there. And one that's not in our portfolios is this VXXB, which I would say is a young man's game, and to be careful with that one. But it is, very correlated to the rest of his portfolio. So the same protection action we'll take, which I'm dying to do, we're just waiting for evidence that it's going to really happen. The first move will be buying the in-the-money call option on the VIX. And let's just see how far out we can go on that right now. So this is going to be the big trade for all of us in the near future, I'm expecting. But you can't go very far out, and every day we're wrong. This thing loses value very quickly. Helper Group says it's already hedged with the VXXB, maybe a little bit, but not when he's writing the covered call on it. Anyway, so the long call option on the VIX is going to be what I think will be a very good play for us soon. So I want to see actual real evidence of a liquidity shortage in the market. See these big hedge funds, Bridgewater, taking profits. So mainly I want to see the yields go up and equities go down at the same time. And I think that's when we might get maybe a little spike in the VIX, which will be hedging our bigger portfolio. So this will be a key play, and we'll be even more precautious to do the QQQ trade. So the other hedge we like beyond the covered call, which is our risk-free way to hedge or to play it safe. We can go out to 2021 with a very inexpensive put option when the time's right. But once again, we're going to wait till things are starting to crack. Because if we are wrong, these just lose money every day very quickly. So
These only one contract for that, or
no. So we're going to do it based on the assets we have. So we're going to have, when it starts to look a little hairy, we'll go 9% of our portfolio in the money call option on the VIX. So let's see what that looks like. So this would be the most expensive VIX call option right now, and possibly one I would look at, maybe a few strikes higher. So 9% of our portfolio will purchase this when the market starts to show a violent sell-off. Now, if things continue to deteriorate, and we see some more fundamental problems, namely inflation or breakdown in the China talks, that's when I might put on the farthest out of the money, most leveraged, hardest to get a return leap option put on the QQQ. And that would only be 1% of our portfolio. And on top of that, we'll be writing those deep in the money covered calls. So we'll have three lines of defense. First, if we see the option market predicting volatility, that's when our covered call is our first line of defense. That's how we're going to generate our consistent return, our bread and butter. If the market does start to get scary and really start to show some violent volatility spikes, we add the VIX trade. And then if we can see a major fundamental problem ahead, and then that's when I would look at that leap QQQ. So it's tough calling downside in the market for sure. Anybody else want to be a guinea pig and we'll build their portfolio together? I'll put your spreadsheet on the page and we can talk out loud what you're thinking and I can help you fill it out. Or any other general questions about strategy? So where are you at in the process so far, Mark? You still paper trading, or are you actually going to put the rubber on the road here?
I have to wait till the 20th of this month before I know.
Okay, cool.
Yeah.
Well, it might be a good 20 days to be waiting for a dip anyway. So We'll see. This has been a very, very aggressive bull market to start the year out.
What do you think of the action in the Bitcoin?
Well, yeah, it's Jeffrey Gundlach is one fellow I like to listen to, and so he predicted the bear market last year. He's been wrong on the rates this year so far, and he's been wrong on well, we'll see if he's wrong on the equities market. He believes we will peak anytime now, and that we won't break into a new high. Of course, he sells bonds, and he's always saying that, so we take that with a grain of salt. He predicted Bitcoin would hit 5,000 with technicals, and I think also looking at all the investment pouring into the space. So my look at Bitcoin is that if the banks continue to have trouble with trade talks, we might get QE5. So if we get bad news between US and China, that could cause all the central banks to ease monetary policy. And I think that would be very bullish for cryptocurrency. But on the other hand, if they strike a deal, we now have like a page in history where perhaps North Korea denuclearizes, we make this trade pact with China, they start to play the world like everyone else without stealing and such. I think that would be very bullish for the markets and force the central banks to raise rates. And I think if rates are rising, that will stunt the equity bull and also cause another crash in Bitcoin. So I think we're at a flip the coin. Who knows what's going to happen? My instincts say that they're going to strike a deal, that the rates are going to rise. So I'm fearful that Bitcoin may have not yet seen its bull market begin because of that. But if I'm wrong and the Chinese are stubborn and they don't want to get bullied around, then perhaps things don't go as planned, and we get a lot of problems in the financial markets, and cryptocurrency does well. So I wouldn't be all in on Bitcoin right now, but it sure makes sense to have a small position.
What do you think about the dollar getting hyper-valuated away, or even possibly becoming dethroned as the preferred currency or the global currency?
Yeah, so that's a prediction that's not playing out for Jeffrey Gundlach so far this year. He was predicting the emerging markets would outperform, and it's still very early. We have the central banks and the corporations manipulating markets right now, so we'll see how it all pans out a year from now. But yeah, I think that China has the opportunity to become the dominant power in the next 50 years, and I think that the Americans are going to be trying to do everything they can to stop that. So I think it's going to cause a lot of volatility in the markets, and we'll see. Last time something similar comes to mind is when Germany was trying to become the biggest power in Europe, and caused the World War I, World War II, the Great Depression. So yeah, it'll be very interesting to see, can they all get along? A big difference now is the threat of nuclear war. Does that stop wars, major wars? So that's flip a coin. We can watch what's going on and react. And that's the nice thing about being a little guy, is that we can see what's going on, can adjust our positions every week, we can manage our own assets, we can create the consistent return from the covered call, and the most important thing is we can watch out for disaster.
Jason, what publications or what things do you read to stay up, on this market?
Sure, yeah, on YouTube, I like to listen to Macro Voices. So they interview someone every Thursday that's notable. I follow Bloomberg, all day. I track all of our tickers on Seeking Alpha with the phone app. So get a lot of specific security level data on that. I like Zero Hedge for macro, critical, bearish, and general sort of content. And then I look for interviews with anybody who's top 10 richest people in the world. I'll definitely listen to anything they have to say. And then, throw in a few hundred books from finance, and that's pretty much what I like to read. I also study history with any spare time.
Okay, cool. Thanks. Appreciate that.
Yeah.
When do you have fun, buddy?
Oh yeah, I got soccer practice 4 times a week with the 10-year-old, so that's my fun. And I like to play Clash Royale, which is owned by one of the companies in our portfolio. Let me show you guys. Yeah, this is a good job if you like reading for sure, and not a great job if you don't. But here's one pick I really like. It's Tencent. Right now, there's this crazy story developing with gaming clouding. So we got Microsoft with, I believe, Stadium. Apple, I can't recall the name. Tencent just came out with a product called Start. And the big idea now is to take the Netflix business model and turn it into something for gaming. But the bigger advantage is not just saving money like you do with Netflix, but now you can play high-end games where the graphics cards are running remotely at the cost of Microsoft, of the cloud. And you can now play these high-end games on a cheap computer or a cheap system. So we're seeing a race between all the big tech companies. Tencent is jumping into the Chinese market, while the big American companies are jumping into the American market, obviously. So yeah, I like to play a strategy game for fun, and that's pretty much our whole routine.
That's nice.
Isn't Tencent own WhatsApp?
Yeah, they own Fortnite, they own WhatsApp, they own a lot. They are one of the best ways to expose yourself to Asia from the US at only $46 a share. So certainly it'll be a bumpy, volatile road, but this is one hot Asian company that I really like and follow, and actually use some of their products.
What do you think of Samsung and the Theta coin?
I haven't studied that. No comment.
No comment. Okay, it seems like they're.
But I'll look into it if I get time. But yeah, what's going on with that?
Well, it seems like Samsung is really backing that Theta coin. And the Theta coin, I think, is down to 10 cents. And they're thinking that the Theta coin might dominate, the Asian, transactions. I don't know if that's true or not. The only problem is you got, these massive manipulations on these coins right now, so you don't really know what's true or false.
Let me get Ryan to try to. Okay, so for all you guys wondering what the heck Theta coin is, so we were interested in creating technology to help investors manage their own portfolios. And so the first product we actually built was something that's a lot like the SPY ETF, except for cryptocurrencies. And so this is part of our diamond level membership, is this technology. And so you can see we're starting to pull back some of the losses on this when it was launched. And most of the money is held in Bitcoin. So if you don't want to get super crazy and manage a big portfolio of cryptocurrencies, just like Mark said, he's holding the right ones. Bitcoin represents a target size of 30%, but it's crashed a lot less than its peers. So you can see, since we built this and haven't touched it, it's a little outweighted, so it lost less relative to its peers. Ethereum's back to even relatively, and is a 20% position. We have Ripple, the banker's coin is what they joke, 6%. Bitcoin Cash, faster version of Bitcoin. Is there room for both? Probably. EOS raised the most money of all cryptocurrencies in the world. Billions of dollars. It was just completely insane. 10%, Litecoin 7, Tron 5, and after that it really drops off a cliff. So I will spend absolutely no time studying the details of all these smaller coins. But I've personally met, and we actually have an investor in our company who's made millions of dollars during the last craze of cryptocurrencies by doing just what we're illustrating here, is having these tiny positions in the smaller coins. So until we get QE5 and still have the risk of rising rates this year, that's where I think we have another extinction event that takes out a lot of these smaller companies, a lot like the dot-com bubble. There's some good tech in there. We had Amazon crash 98%. Now it's created the richest man in the world. So yeah, I think there's some diamonds in here, and certainly owning some of these bigger coins right now is smart. But we're letting these tiny positions just continue to suffer until we definitely get some sort of clarity as to what's going to happen with the Federal Reserve's interest rate levels. So the bond market's suggesting that we're headed lower, but there's been this huge manipulation in the bond market. So it's definitely a time to definitely be very aware of what's going on, to say the least. In general, though, cryptocurrencies should be a tiny part of your portfolio that represents something of the likes of 10 cents.
I wanted to see what I could clarify on what you're showing there, just understanding more of the trade alert and target shares, and on that minus 4,657, is the program telling you that you should add $4,000 or that amount into shares?
So target shares of cash is $1,635, but we have $6,292. So it says you should buy some stock. But we know I have not yet programmed the software to just round this and zero these out. So we know that we want to, because have the mindset we want to protect our assets through the covered call as our first line of defense. It gives us a unique ability to risk-free hedge our positions and generate a profit. So the only way to do that is by owning the asset and doing the in-the-money covered call. So we love that strategy when we're trying to predict a downturn. Once we actually see downturn, that's when I will just join the momentum and we'll put on that simple VIX QQQ. Now, in this particular portfolio, this is our Thursday class where we're doing emerging markets. So we might do slightly different indexes to hedge this portfolio versus the SPY or the high yield. So yes, this is helping investors figure out a pretty simple calculation, but how would you do it? If I gave you these 8 tickers and I told you you should try to figure out this asset allocation, most people just don't know how to do that, or they don't want to do that. It's not, rocket science, but our platform, you punch in how much money you have, you can mess with these categorical asset allocations to modify yours. You have the power to update your weight levels if you want to, or you use it default and it tells you exactly what to do. It tells you how many shares you have to buy to hit your portfolio allocation sizes. So it's a glorified, colorful calculator at this point. But in 12 years of doing this, I've never seen anyone provide just a simple spreadsheet to manage your investments like we have.
Yeah, when would you actually add on though? At what point?
We're working on turning this into a phone app. So it's 3 buttons, and you maybe have a few opportunities to tweak it here and there, just like you do this. So yeah, big picture, I want this company to partner with Robinhood phone app and potentially be bought out. So they have a huge audience of millennials who have pathetic portfolio sizes and who are taking advantage of a great deal of free trades, whereas all the larger account sizes are in our audience. And you guys already have the broker dealer you love, and our particular strategy isn't super cost. It's not expensive to do our trades. But imagine if you could further automate this with Robinhood. So there's some things that I would do differently if I didn't have to rely on issuing a trade alert exactly at 11 every day. So certainly we could improve this strategy's general idea with some automation. So that's something that's in the pipeline for this year.
But I mean, again, in looking at the target shares, I mean, the software's saying that right now you should have 329 shares of Microsoft and down still on the line, right?
Mm-hmm.
Okay, so when do you actually reach those target shares where you would go in and purchase?
All right, well, let's say, oh my gosh, big trouble for Microsoft. We're going 0% here, guys. We're out of tech. Tech is screwed. I think we're entering a period where we might need to bail out the banks and everything's going to crash, but we still want to make some good money right now. Let's go to this setting. Let's go 10% cash, 90% banks. Oh, we got some trade alerts. Now we need to sell Microsoft, Apple, Facebook, Intel, Cisco, Comcast, and we actually know exactly how many shares we need to purchase of Bank of America, Wells Fargo. Now we're trading all our assets into 2 securities that are most likely too big to fail and gives us an opportunity to weather a pretty serious storm, generate retirement income. So it'd be something like that might cause us to need that outside of the initial launch. Once you first launch, it's going to be very similar for a long period of time, unless you maybe start small with this portfolio and now you're like, well, all right, this guy's the real deal. I'm going to put in 900,000. Now we have way too much cash, and instead of spending an hour trying to figure out how many shares to buy, you know what to do instantly, and you keep track of it. So again, it's a glorified colored calculator at this point.
I guess
Rep wants to know if I'll be able to manage other people's portfolios. No, we're not going to do that, but the software will allow you to automate managing your own portfolio. So it'll be something along those lines.
Is it going to primarily be Robinhood, or will it be other platforms like a TD or a Schwab or somebody like that?
Yeah, we definitely will cross program it to other platforms, but Robinhood's the first target that we're looking at planning for at this point. And the main reason is they have completely free trading, so it's hard to beat that.
Yeah, hard to beat that. Does Robinhood handle 401ks?
Yes.
Okay.
And they have the best phone app by far.
Okay. What is the danger of using Robinhood?
No danger. They're valued at $5 billion. They're backed by all the Silicon Valley giants, the VCs. And they're trying to disrupt, a big industry, the brokerage industry.
Right.
So they've done well attracting the millennials, but they need help bringing in decent sized portfolios. So that's where in terms of having a good benefit to the ecosystem, that's where I see Portfolio Builder really potentially helping that company. But sure, it'd help any brokerage. So we'd definitely consider the phone app working with multiple. Also, you can only insure a certain amount of capital at each brokerage. So for bigger investors following this, all of a sudden it makes a lot of sense to have multiple accounts.
So you're saying like in this case, you might not keep this portfolio the way it is. You may change it up in the future.
So the trade alert feature is really good for launching your initial portfolio. It's really good for having to deal with adding or subtracting capital. So if you were to dramatically change your portfolio size, this would alleviate some time. And also if we were to change the categorical allocation from these various colors, if we wanted to change that, it would help. If we were to change the palette, if all of a sudden we didn't want to be holding perhaps tech companies and we wanted to flip these high yield positions out with, say, underperforming assets like healthcare or biotech, or Kroger, or some of those. So certainly, once you launch it, it seems like you're not using that very often. This is not like something you're going to do every week. It's really when we're making dramatic changes to our portfolio that the trade alert will save you time. Okay, I got a question from RetRep120. Is there one exchange where you can buy most, if not all, of your listed cryptos? Yeah. So in our new build coming out, which is in testing, you can see this is color coded once again. Yellow is Coinbase, blue is Binance. So those are the only two exchanges you'll need. And if you do want to learn a crap load about cryptocurrencies, we spent the better part of a year creating an amazing course. So quick start guide is linked to in every update. But if you go to the bottom, click here to begin our crypto tutorials. There's a great deal of information required to actually do well with cryptocurrencies in terms of securing your assets safely over time. Now, I think Coinbase and Binance are among the safest places in the cryptocurrency world, but what's more important is learning how to take it offline and then store it for a long period of time. So we're not trying to swing trade cryptocurrencies. We're trying to build a growth product, like an index of the cryptocurrencies, and hold it for a long time. And we're expecting the central banks will keep printing and printing and printing and printing. And that because of that, the valuation of these will go up in time. And so it's simple. Shouldn't be a huge part of your portfolio going into retirement. But if you want some growth, this is definitely something we love and recommend, and it's a long-term hold. So bunch of tutorials. Each of these are very detailed. The nice thing is after you take this course, you're not going to be a victim of identity theft, most likely. You're going to know an awful lot about digital security after you take this course. So it's all there, and you can click and do it right now if you like. And so this is how you actually start using that part of the technology right here. So we got, first you got to learn how to protect yourself and set up your computer right. And then the second part of the course is how to actually buy and sell and account for your trading right here.
Do you also have any training on how to store your coins on a Nano S or a Trezor?
No, just the Ledger. But
Okay.
there's so much good YouTube stuff out there. I mean, a lot of our tutorial pages are simply, I found a good YouTube video and put it there and organized it so that you don't waste your time trying to search all over the place. All right, guys, any last questions?
Not really.
I'm pretty good, yeah.
Henry's got a question. So he's asking if I'm submitting auto trade programs to brokerage firms. No, I'm not doing that. What I was talking about though is creating a phone app that would help you automate what we're teaching you how to do, where it have some settings that you could pick from and it would do that. Mark, just you should have my phone number. If not, I'll email it to you, so that if you have any questions when you do go live. But you know, you got me live on the webinars as well, so here to help you, buddy. All right, guys. Well, another great webinar. I really appreciate everyone's time. New trade alert tomorrow. We're dying to put on that VIX hedge. We just need the market to tell us when the time is. And in the meanwhile, we'll keep writing our covered calls. So thank you, everyone, and look forward to our next webanr tomorrow.
Thanks, Jason.
You're welcome. Thanks.
Bye.